It's great to have you on. Thanks for joining. Have you been killing it the last couple of years? It's been so long since you've been on. Would you say you have been able to repeat your great success again and again and again? You've been killing it?
Well, first, I do want to congratulate you guys on 30 years. And Mike's here instead of Andrew. He looks kind of like a buffed Andrew, so I'll make pretend like that.
Okay.
And Becky's not here, so...
It's actually my social media handle.
You look nothing like her. Yeah.
No, I look nothing.
You do. No, you don't.
That's not even close.
And a wig wouldn't help. Nothing would help.
Nothing would help. Nothing would help. Yeah, I mean, we're having a pretty good year. I mean, I actually was here last year, I guess, talking about China.
The China thing.
Yeah, which turned out to be half decently good.
At the beginning, and then maybe not so good later, right? But who knows how long you hold.
Now we're up big.
Now.
We're pretty, I mean,
it worked.
Kind of, yeah, it's been big. I mean, like Alibaba's up a lot, so it worked pretty well. So, I mean, we're having a pretty good year.
Where are we? And it's a good day for you to... Why did you want to come in today?
I just came in because I felt bad.
About missing
And I'm in New York, the whole city, and I felt bad about missing your 30th anniversary.
Okay.
Which is a big deal.
But it is the Fed cut yesterday first.
Yeah,
is it the beginning of it?
I noticed it. I did.
You were watching this morning. You watched Frank Holland talk about it. Is it the beginning of an easing cycle?
Well, look, I mean, they eased yesterday, and I think the market knows there's another ease coming. Could be 2 more ease coming. That's what's in. I don't know what's in there this morning, but and you're easing, at least those eases are into a, as you just saw numbers out, not in a bad economy. And look, I don't know how long that lasts, and we're not at cheap levels in this market. On the other hand, when they eased after long-term capital and then they used to get into Y2K, I mean, we weren't in a bad economy then, and the market went a little bit nuts. I'm not saying the market's going to be nuts now, but, and by the way, the other side of that was a disaster, okay? Mm-hmm. So, I mean, I don't think another ease matters, as far as being too easy. It's going to be a little bit restrictive, or even if they do too. Beyond that, it's going to be a little tricky, I think, because you got to be careful not to make things too hot, to have the other side of the mountain, which was really freaking ugly, in 2000, 2001, etc.
You haven't been on since Trump got elected.
That's not true. I was on last year talking about China.
Was that after Trump got elected?
That was just last year.
Was
it last year after Trump? I can't remember when he got elected. No, it might have been before Trump got elected, actually.
Yeah, I don't think you've been. You haven't talked about tariffs, industrial policy, the big, beautiful bill. Do any of those go into your calculus for what you do?
Look, I'm not like a lot of, classically trained, we had honors in economics and college economists. I don't love tariffs. On the other hand, I don't think 10% tariffs, at least at that level, make a difference.
Okay.
And there's something to be said for having a little bit of, in an AI sort of world where you may have, a little less employment, have a little protection, or having people, protecting people here. And the same thing with immigration policy. You could argue that if you do have eventual layoffs because of AI. So I can be fine with it. I don't love the 25% or the 50% tariffs. I think they're a little bit destructive. But quite frankly, 5 or 10%, or, which are a little bit higher, I understand that. I don't think it really makes a difference. And it may be kind of constructive where we are right now.
You think it's a slippery slope to some type of state-sponsored industry by taking a stake in Intel and having NVIDIA, pay royalties on stuff we let them sell to China? Or any of those things bother you? Or
I don't love it when it comes from, and neither do you, because you've made comments in the past, when it comes from Democrats. And I don't love it when it comes from Republicans.
Right.
I mean, does it matter if it's not done widespread? Again, no. So it's, to be consistent about it, I don't love it on either side when it happens, because you take away from the natural process.
Does a great American economy, and it's the greatest ever in the world, does that, and AI, do those two things just sum up why I'm not going to put words in your mouth, but are you excited about the stock market for the next couple of years?
I'm excited. I'm not like, there was a phrase I used, about, I guess it was, you said it was a term used in the Navy, balls to the walls in 2010.
No, it's actually fine to use that because it's a throttle.
I know,
it has nothing to do with
I know.
testicles.
So we decided it was You said that word. Who told you to say that word?
Testicles is a medical term.
Anyways, so...
It's a medical term.
Anyways, no, look, I'm constructive because of the easing right now, but I'm also miserable because of the levels. Does that make sense? So
is it
yes,
just seven
yes.
stocks, though, and everything else is cheap?
What's that?
Is it just 7 stocks and everything else is cheap? When they do these weighted...
No, it's not, though. I mean,
everything, nothing's cheap anymore?
No, the other 470, the 493 are like 20 times.
They're 20 times.
Maybe a little lower than that, but they're not cheap by historical standards. Now, they're cheap pockets. I mean, if we do get rates lower, some of the housing-related stocks are maybe cheap, but they're not showing up in earnings right now because they've had tough quarters, and they're still having tough quarters. So depending where the 10-year goes and, where mortgage rates go, they could be interesting. But then again, if it just continues on the same way, they may not be interesting.
So you're not here to pass something down from on high, that it's time to just...
I am here because I just want to congratulate you and Becky and Andrew.
You guys have to have like a big party every year.
And have Tepper come in. I know.
I won't come every year.
I know. You don't come every year. I can't remember the last time you were in studio either. I mean, this is...
I was in the studio last time.
Joe's been joking about, okay, well, not really joking, but 3% is a new target, right?
For the Fed.
The average CPI for 30 years back, I mean, it's like 2.9 or something like that. Like, in other words, 2% is not magic. The stock market seems to be kind of okay where we are if the bond market's not going to rebel against it. So how do we think about it?
My view has been that one easing or two easings or even three easings just don't matter.
Yeah.
Don't matter because we're still in a little restrictive territory with looks like a little bit too high inflation, even without the tariff-induced inflation. So they should be a little bit restrictive. Beyond that, I think it can, then you're really risking a lot of things, a weaker dollar, more inflation, and those sort of things. So it doesn't matter what happens. If you really want to play with mortgages a little bit, the Wall Street Journal had a thing that PIMCO said about, not reducing the balance sheet with mortgages. Right. That may be something you do, but to go too much more on interest rates, depending what happens with the economy, it gets into the danger territory. Right now, to go another 25 basis points or another 50 basis points, does it really matter? One way or another. It probably keeps the stock market a little buoyant. You have to be careful because we're, like you said, where the average stock isn't cheap. The big stocks are not cheap. I mean, so you don't have cheapness here, but you do have a constructive, I'm not fighting the Fed. I'm not going to do that, at least in the near term. And then it's what happens on the flip, right?
Presumably, though, the composition of the Fed's going to get more dovish in the next several months, right? I mean, so therefore, maybe they're going to push it more than just a couple of eases.
It's an interesting thing when you say that because just what we're talking about here. If you push it, are you pushing the things you want to push? And the things you really want to push is, probably the housing market and, the pent-up demand there. So that can be counterproductive. So I don't think at the end of the day that, you do have people like Besson in there, and I think they understand that. And they also understand that, like I said, the same thing I just said, the 25, the 50, the 75, maybe if you go that far, does it really make that much difference? Right. Okay, so, but if you push it too far, well, at that point, the old Joe would be going nuts, okay? I mean, at that point, it just doesn't make a lot of economic sense. And you can't, a long time ago when I was a young man, when I was 30, I thought I can control individual markets. I can't control anything, and either can the Fed or either can people there. So you can push it so far, but you can't push it beyond that. And I think hopefully they understand that.